We are live now.
Thank you. Good afternoon, everybody. Thank you very much for taking the time to join us today on this very, very interesting subject of reaching the unfunded, or providing access to Indians across the country to financial services, products and services, using digital as a mechanism of reaching those customers. We have a very, very distinguished panel with us. They encompass a wide variety of skills, talents, and businesses that they run. Given that we have a largish panel today of 8 people, including myself, I think it is most appropriate, and given the fact that we have very limited time in which to engage all of these 8 individuals in conversation, we are not going to introduce each one of them individually. I'd only request them to give a very, very short, brief introduction about themselves when they do get an opportunity to speak. I want to take this opportunity to thank the ASSOCHAM team, Dr. Rajesh Singh, and the technical team for having made this possible. I want to thank once again the panelists for taking the time to be here. It's an extremely interesting subject, making access available to our countrymen. This is something that we've been doing, or we've been trying to do since we became independent. If I'm not mistaken, one of the reasons why banks were nationalized in 1969 was to ensure that financial services were available more easily and more equitably across the country. So access is something that has driven policymakers since the beginning of modern India. The question now is, given the fact that India is now embracing digital means and modes of communication, digital as a technology, does the paradigm change? Is it now easier for us to include those who were previously not included in the financial services using digital means and mechanisms? With me is, as I said, a stellar cast. Mr. Ashutosh Chadda, Mr. Ketan Desai, Mr. Sadaf Saeed, Mr. Karan Mehta, Mr. Shashank Sharma, Mr. Amit Tiwari, and Mr. Balaji Parthasarathy. Now let me throw the question open to the group on whether the paradigm has changed, whether digital is making it easier for us to reach customers who are hitherto unreached. So with that, let me turn this over to Mr. Chadda to start with, and then we will take the conversation where it goes. Mr. Chadda.
Thank you, Mr. Shadri. You wanted a brief introduction, so yeah, my name is Ashutosh. I look after public policy at MasterCard. As we all know, MasterCard is a payment network company based out of the United States, but operating for the last maybe 40 years in India. We power all the network behind the debit cards and credit cards. But that's the known part. The lesser known part about that is that we also provide a lot of services from fraud prevention, leveraging artificial intelligence to ensure that there's a trust in the entire ecosystem, because that I think is one of the key areas for driving digital commerce. So to the point that you raised, Mr. Shadi, I think so it's very, very interesting, because I think the concept of inclusion, what is inclusion if you really step back and understand? Inclusion is making sure that every person, irrespective of where they stay, where they are from, their capabilities, their abilities, have the ability to get the same set of services from society, from the government, and from industry as anybody else. Now, if you really look at that and you look at the size of our country and the number of people that we have, reaching out in a physical means, as you very correctly said, ever since the banks also got nationalized, becomes a fundamental, I wouldn't say improbability, but it becomes very, very difficult. And what we have seen is that technology has actually enabled us in many ways. And there are so many colleagues of mine in the payment fintech space. I'm sure they'll espouse on that a little bit more. But the way I look at how technology has enabled all of us is, it's done it in 3 or 4 ways. One is it's made reach possible, or rather, I would say scale possible. The second thing that it's done, it's made the solution reach the individual much more possible rather than the person go to the solution. So instead of me going to a bank or me going to an insurance company, actually I have those solutions come to me. The third thing that it's done very importantly, and I'm sure somebody will talk about it, is that it has lowered the cost of service and delivery. And that lowering of cost of service and delivery has led to a very interesting shift. And that shift is it has enabled service providers to actually customize solutions for individuals or organizations. It has enabled you to look at small ticket solutions. So because if the cost of service and delivery goes down, you can actually afford to give somebody a 100,000 rupee loan as compared to, because of the overall cost, only wanting to do something which is worth 10 lakhs. So I think the paradigm has shifted. I mean, the concept is the same, making sure everybody gets access to financial services wherever they are, irrespective of their background. But technology has enabled reach, scale, speed, efficiency. The other thing that technology has enabled, which we are seeing now, is your ability to ensure that you're able to measure credit, you're able to evaluate people's credit worthiness in real time, and ensure that you have solutions available to them. And we can obviously talk about a little later during this thing, what are some of those solutions. So that's where I would really think I'm really excited with the power of technology today to really be able to take inclusion to the very next level in the
Right.
country.
So I'll just like to add to what Ashutosh said. I'm Amit Tiwari, representing LoanTap Financial Technologies. We have an in-house NBFC. Thus, we call ourselves digital NBFC rather, because fintech tends to be a very, very broad word. So we are essentially into a lending space. Now, if you see the challenge, as we were discussing, if you go to the bottom of the pyramid, you need some very simple product, and the limits which these people need are not very high. Now, when you look from the conventional banks or conventional ecosystem, producing a sachet product, I'll prefer calling it a sachet loan product, tends to be very expensive because you have a cost of sourcing, cost of processing, cost of collection, everything put together. So if a bank feels that maybe cost of processing a loan of say 1 lakh rupee and maybe 50 lakh rupees same, they'll prefer going for a 50 lakh rupee. Now, what technology does is it's a great leveler. I mean, if you look at people like us, we don't have much physical infrastructure. We are physically present only across 2 locations with very small co-working presence across some cities. But our presence is across the length and breadth of the country. Now, how we are able to do it with the help of technology? We look at the smartphone penetration, for instance. Today, the number of users in rural areas is more than what they are in urban areas. So, and we keep on generating data. Even somebody, a migrant laborer in a city like Delhi or Mumbai, transfers money back to his home. So there are various data points which are getting generated today. There are people in farm tech who are aggregating the requirements of farmers and doing bulk buying. Similarly, you have people in health space. Similarly, you have even people in spaces like e-rickshaw or something, simple garages, or even the people who are on the online grocery chain. So you are getting plenty of data generated now, which can become a source for you to source and process at a low cost. And when you are getting into the operational cost of it, today, apart from the bureau data which you have, you are able to do eKYC very seamlessly with the help of Aadhaar. Banks can do it directly, even NBFCs can do it in an offline mode. When you are processing, you have your algorithm built across plethora of these data providers. So while the end user, as an e-cycle rickshaw driver, might not be having really understanding the data, but his aggregator is having all the data to us. So we are really able to create a lot of products with the help of bureau and with the help of the data being generated by the particular guy. Similarly, when you come to agreements, you have e-agreements in place. When you talk in terms of collecting, then of course you can even do it through eNACH, and now it's a very, very simple process. So putting together, I can say tech has become a very big leveler for everybody, and now we can reach to the bottom of the pyramid and really create sachet product which are not based on conventional ITRs or bank statements or really deep underwriting. You don't need a deep underwriting for a 50,000 or 1 lakh rupee product. What you need is proper data sets And there you can really create a product very fruitfully at a low cost and create those sachet product which is needed for the bottom of the pyramid.
Go ahead, Shashank. I can see that you want to say something.
I think in addition to this, so basically, as Mr. Tiwari mentioned, that we have reached towards the penetration stage. So basically, if I talk about, let's say, a mobile phone penetration in India versus a banking account penetration, so I think we've reached to a level of more than 85% from that note. And an interesting fact over here is that, the majority of these customers, I would say close to 60% today have an access to a 3G or a 5G connection. So, that actually helps us to portray our services more better. So if I talk about the usage and adaptability towards banking and financial apps, so we are sitting at a level of close to 30%, which is a fairly decent level if I talk about, an opportunity in the market. So when we say that whether technology today has helped us to penetrate deep into the market, the answer is pretty much yes. And, in fact, it has enabled certain parameters in top of that, which, basically is delivering that access to the customer right at the doorstep, and then overcoming the challenges of financial illiteracy. I think that we've been talking about financial inclusion for quite some time now, but the very fact that the customers at the ground level were not that literate is was acting as a hindrance. So I think we as technology platforms have enabled ourselves to basically help and go into that space. And a point to be added over here is that the kind of training which today can be provided or imparted by the use of technology to a customer, it's like seamless in nature, and I think this has actually helped to penetrate. And then apart from the standard sources of data analysis with respect to credit evaluation, since we as a company we work into this particular space, so what we find out is that there are a lot of alternate data points getting generated. Now some of them have been mentioned by Mr. Tiwari as well. So the use of all these alternate data points is something which has actually helped the industry to grow multifold. And I think in the times to come, this also brings a huge opportunity for all of us among here to deliberate more on this subject and discuss more on what can be the key initiatives which we can take in this space.
So let me switch. So you're making the point that technology has made it easier, cheaper for us to reach out, and it has also provided access in the way that customers can also reach out seamlessly and easily to the providers of these products and services. Let me now switch to Mr. Ketan Doshi, who runs actually a physical infrastructure which is technologically enabled, and ask him what he thinks about whether technology makes it easier for us to provide access to the financial services industry.
So let me take you through what we do first. I mean, as PayPoint India, we have created a physical distribution channel, which is like typically O2O channel. We bring offline customers online. So a customer can walk into my store and access various services. So typically, what we have seen is a customer initially needs handholding. Unless and until you have an handholding, I don't see people coming into the network. So classic test case or a classic success story is our Jan Dhan Yojana, what we have done. And we are also, as PayPoint India, we are also part of the BC network. So 50 years it took us to create 50% penetration for bank accounts. And in 2006-07, Modi ji initiated the entire, not Modi ji, the government for that, initiated the BC model, where BCs, which are typically an offline customers coming to a store which are connected online, they can drop into a store and open a bank account. Post that, in 2014-15, PMJDY initiative was taken. So between last 6 years, we captured 45% of the unbanked community into the banking system. So that is a classic success story which we have seen. How it happened? Because of the retail reach, the O2O kind of reach which we had. Customers unbanked customers can come to a store, get an assistance, get an handholding of a retailer. Now this retailer is actually bringing the offline customers online through their technology. So this kind of bridge is very much required. And we have seen lots of work happening on cost optimization on data. So a customer can be onboarded very cheaply through eKYC. And data analysis can be done and credit check can be done very easily, but nothing has happened on the customer acquisition front or the access side. So if this kind of channels open up and lending happens at this channels, we can also service a ticket size of 10,000 rupees. And we need access point hand holding. We need training of customers how they can benefit rather than going to a local banya. They can drop into a store, access the various digital channels through these stores. So I think this kind of handholding is required, and we already have a success story of PMJDY running in the country. I think next phase of growth will come on lending. Already we have hawkers lending happening through government system, like 10,000 rupees hawkers dispersal. Lending is going to start by various banks, which is led by government. Now this can be only done through this kind of network. So I see a very big yes. So
thanks. Go ahead. Sorry.
Yeah,
So
if
again,
I may add, this is Balaji here. I work with Axion, and we are actually advising many people in the microfinance space or banks across Asia, so not necessarily in India. But one of the themes that has emerged is like what Ketan was saying, a shift on the customer acquisition. So people are talking about small ticket emergency loans as a concept, which was never heard of. And I used to work in Ujjivan earlier on before I moved to this role. So everybody is talking about emergency loan, small ticket size loans, which is to translate also low cost, low ticket size. But the crux of this is the acquisition, and very many times we jump into technology solutions because technology is available, and it translates into something called a smartphone B2C app. So many of the technology which we have is available for facilitating the entire acquisition, onboarding, underwriting, payments. So there is no issue in technology itself. It's been there for quite some time. The blue collar jobs in the cities have adopted it, but the unbanked are challenged because we did a customer insight survey, and many of the observations which were there is that people don't necessarily have smartphones. They still feature phones. The trigger for that is likely to be the geo platform. The trigger is likely to be cheaper smartphones, but that trigger is still not happened. And uptake of technology is where I would see a great opportunity for all of us to think of how we handled, and the likes of BC's, Ketan's organization would be critical to make sure that happens, because handholding, getting them onto the digital bandwagon would be the key requirements to make sure that we're able to succeed, because tech is out there and it's been there for quite some time now.
Thank you, Balaji. So let me allow me to just paraphrase what. Yeah, go ahead, Ketan.
So most of the online, on the rural front, most of the online consumption is towards media and not towards any financial products right now at this moment. This will shift over a period of time. So, but to bring them to the financial network via a phone would take some time, because we are in first phase of financial inclusion. You've just seen bank accounts opening, which was so difficult for us. So to leapfrog from opening a bank account to a digital player who is using only mobile would take some time, and lending will be the next thing.
So thanks, Ketan. Before I turn to Mr. Saeed, who represents the microfinance industry, let me point out one thing that Mr. Doshi was mentioning, that it took us about 50 years to come to 45-50% banking penetration in the country. And we moved from 50% to something like 95% in the space of 6 or 7 years, which is essentially due to technology enabling the entire process. I guess, is that a right statement of what you mentioned, Mr. Doshi?
Yes, technology has been enabling thing to reduce the cost for servicing a low ticket size, instrument.
Brilliant. So that's a very clear indication that inclusion is being helped by technology. So one of the areas where I think we made a huge amount of progress is on the microfinance side, where now both in rural India and in urban India, small ticket loans are available reasonably easily, which was not the case maybe even 20 years ago. But today, people are spoiled for choice from what I'm told, and we are very pleased to have Mr. Saeed with us. And let me turn this over to Mr. Saeed and ask him the same question as to whether technology is helping him provide access to those who did not have access in the past.
Thank you very much, Mr. Shishadri. Good afternoon, everyone, and good afternoon to everyone who's listening. I think I must congratulate ASSOCHAM for choosing such an interesting topic because to my heart, financial inclusion, penetration in rural areas, and banking the unbanked. This is what we have been working for. I represent Muthoot Microfinance, which is an organization which caters to people living at the bottom of the pyramid. So we provide JLG loans to women entrepreneurs. This is more on the lines of what Mohammed Yunus's organization, Grameen Bank in Bangladesh does, so something similar to that, modified to our context. But I think financial inclusion is the primary kind of a goal of our entire effort. And financial inclusion, when we talk about, it is not only about opening a bank account. It is about opening a bank, providing saving facility, providing credit, providing insurance, providing remittance, and financial literacy. So whole gamut of products that are needed. Our institution caters to around 1.8 million clients, and all of these are rural households. These are females living at the bottom of the pyramid with an annual household income of 1,20,000 or lower. So we are really at the bottom layer of the customers that we are catering to. And I can tell you by experience, and as Shadriji has also mentioned, it took us 45 years to kind of create 45% penetration. We have been in this business for last 10 years. We have been struggling to disperse our loan digitally forever. I think with a lot of effort, we were able to reach to a 20% kind of a penetration where we were digitally disbursing our loan. But since the trinity of Jandan, Aadhaar, and mobile has happened, the JAM network has been created by the government and Honorable Prime Minister, Mr. Modi. We are disbursing now 100% of our loan through this channel. And these are all 1.8 million customers getting a loan in a year. And I think with the penetration and adoption of technology tools, I think this will further enable us to provide additional services. We not only provide the loans through it, we provide services for them to buy products online through the app. All of our customers have smartphones. One person in the household would definitely have a smartphone. Either it is the customer herself, or a husband, or a son or daughter would have a smartphone. We ourselves sell mobiles as in finance mobile, so we finance around 5 our customer till date. So it has really created the infrastructure, and I can tell you we are in deep rural areas, around 320 districts of rural India, from length and breadth of Kerala to Punjab and Himachal, just about in Kashmir also. So everywhere these women are able to kind of transact online, are able to get their loans online, and are able to repay. I think another revolution which has happened in the recent past is the great work that NPCI has done. They have really created an infrastructure where remittance and the transfer of money can happen. Even the transaction, the number of transactions that happen on RuPay card is very, very high. I think our co-panelist from MasterCard can definitely throw more light on it. But all of this is really enabling us to reach out to the last mile customer. I think traditionally the challenge with the banking sector has been that cost of operation at the rural area is very high, and the kind of infrastructure that is needed for running a bank is not really a viable these finance institution bridge that gap. We are among the top 5 microfinance institution in India. So we have been operating, we have been bridging that gap. But again, we are able to primary serve. Can you hear me?
We are losing you periodically. Is there anybody at home who's streaming a movie or something? You stop them, and we'll be able to see you more easily. There seems to be a bandwidth issue, which maybe you can turn off the video and then talk. Maybe that will help. Yeah, go ahead.
Yeah, maybe. Am I audible now?
Yeah, you're audible now.
Yeah. So what I've been talking about, that the Jan Dhan Aadhaar and has created that infrastructure that we are able to reach to the clients. And earlier days we were struggling to even reach to a 20% kind of online transaction with our customers. Now 100% of our loan are disbursed through online. Even on the repayment side, we are using UPI payments, we are using NPCI, and most of our customers are able to kind of transact online. So I think the overall infrastructure that has come about in last 5 to 6 years has been great. And I think right now what we need is more client education and awareness that is required. I think technology is a great leveler. It creates an equal platform for everyone. And we are able to reach out to our customers in deep rural areas in matter of minutes. Any communication that we want to send, any loan that we want to send. Today, a customer can borrow a loan just by sending a message to us. So I think technology has been the reason why we are able to reach out to these clients and seamlessly deliver these services. Further, I think more the adoption is, more the customer awareness is, more transactions will take place, and customer is able to get those services, and she also appreciate. The bigger challenge that we faced among our client base is even our nearest ATM or nearest bank branch would be some 5 kilometers, 6 kilometers, and the kind of customers that we are dealing with, they are earning daily and spending money daily. So if they go out to transact at a bank, they lose a day's wages. So I think technology kind of levels that they have been able to kind of do their transaction online. They can withdraw money from a PC partner or anybody who's there. So I think the future is very clear. Technology would create the access. It's about all the infrastructure and all the panelists here, how we leverage on that access on the network that has been created by technology. That's my suggestion.
Brilliant. Thank you, Mr. Said. So basically, I think all the entire panel is unanimous, saying that technology has made it possible for us to access customers that were hitherto not accessible in an economic manner. Technology has ensured that cost of such access is reasonable and something that you can actually bear from in the context of a for-profit organization. The next question that I want to throw to the panelists is, look, now we have the technology. We also have people who are equipped with smartphones. We have this whole digital infrastructure. But in India, literacy still remains a challenge. The fact that we are one country which has multiple languages is still a challenge. We're talking here in English. Very often our products and services are available in that particular language, which is not spoken or understood very, very well outside of perhaps a few centers, large metropolitan centers, perhaps. So what else is required? So what is the next step? Is there anything else that is required to enable or ensure that the power of the new technology, the power of the new processes, the power of the new products and the new systems that have been put in place can actually make access more democratically available?
A very pertinent question, Mr. Sheshadri, and This is what we were struggling with when we started our journey 4 years ago, because all of us, the core team in Loan App, we are bankers. Now we are catered to both the segments, the salaried segment and the SME, the small tickets. We extend to SMEs too. Now it was maybe easier for us because we source it all digitally, right? Entire journey, 100% of our loan are digital. So while it is somewhat easier to reach out to a salaried segment, because salaried segment is scattered about primarily tier A, tier B, tier C towns and all. But how do you really cater digitally and reach out digitally to SMEs, especially the smaller players, even in urban centers or Cat B, Cat C towns? It's not very simple to really generate data or even reach out or source at an economic way. So the way we move forward was that now we have tied up almost over the years, started with more than 300 data generators. Now, what are these data generators? Like, for instance, we have tied up with one of the biggest wallet companies, Payments Bank of India. Now, a lot of transactions happens through them. They have their business wallets where their kirana shops and all use it, or small restaurants use it. A lot of data gets generated, alternate data gets generated from there. There are online grocery chains. Now, B2B and B2C. They are present across more than 100 cities of India. Very small, even the grocery kirana shop owners are active on those platforms. We have, for instance, another spectrum. We have tied up with some people who operate the entire ecosystem of e-rickshaws. Or somebody, there are players who pan-India operate small garages. They have created very simple softwares where maybe specifically for garages, sourcing the components, managing the cash flows and all. So apart from regular data, which is not everybody will really filing a proper ITR or balance sheets and all, not really possible for a very small businessman to do. But you get a lot of alternate data getting generated there. Now, once you tie up with these data generators, which are there and they are now really spread across the span of the country, and I'll not say that they have really gone into deep rural areas, but yes, to tier C level of cities, they are there. And you have crores of our Indians. Even in fact, if you see the GST data also, almost only 20% of the people who are filing GST has access to formal credit. So all across, when we talk in terms of credit, there are many people who are not having access. With the help of these data generators, once you tie up with these data generators, assimilators, then you are able to reach to the final customer. So we use the alternate data apart from the normal data wherever we can use, and we are able to then source very fruitfully. We are able to create sector-specific algorithms. So an algorithm of kirana segment will be very different from what we are doing for a garage, maybe, or somebody in another sector. So it's all across different sectors, different algorithms. But once you're able to generate it and automate it, the cost of sourcing goes down. That you have whatever we just now discussed about Jam help us in cutting down everything. So it becomes a real leveler, and we are able to give those sachet products.
If I could add, Mr. Shadri, I think. Can you hear me?
Yeah, go ahead. Yeah, we can hear you.
Sorry. Yeah. So I think Amit laid some very important points, and I would actually look at this as a pivot across three key pillars. The first being availability and accessibility for people and to technology or to solutions, right? If you're looking at the last mile. The second being affordability of those for the individuals that who are using this. And the last and foremost, but I would say the most important, is the applicability of those solutions. And let me illustrate with a few examples. So, for example, when we talk about the kirana shop owners, right? And I think over the last 3 months, the kirana shop owners, as well as the fruit vendors who've been coming to all our houses and all the colonies, have been the most active, right? Now, let's look at what about the tier 3, 4, 5, 6 towns. There also you have kirana shop owners who are also possibly in a way disadvantaged because of the applicability of technology. So are there ways by which we can enable this kirana shop owner to actually get onboarded to start accepting digital payments? And not just accepting digital payments, even back end, are there ways by which that same kirana shop owner can then also purchase his or her goods or his supplies also digitally, so that the entire process becomes seamless in nature? So I think when I pivoted across these 3 A's, which is availability of technology and accessibility to that technology, affordability and applicability, based on the type of situation that this thing is, we are actually going to be able to use and drive technology enablement much better. And I'll use another example. Amit was talking about alternate methods of building credit, and this is an example of what we started actually in Africa. We called it the Jazaduka. We are calling it Project Kirana in India. We're going to be launching it actually next year. So we're doing exactly the same thing, which is what we're trying to do is we're looking at a Kirana shop owner who purchases practically every week from a distributor his supplies for fast moving consumer goods, things like toothpaste, soaps, etc., etc. And he purchases that every week, and based on that, he again based on his sales in the week, he again purchases the next week. Now, that's a very interesting alternate data which is available to us. So what we are trying to do is we will be tying up with the bank, we'll be tying up with the FMCG, their distributors, and use the history of that particular neighborhood convenience store over the years to determine his or her credit worthiness. And these are typically very small mom and pop shops who may not have a digital footprint otherwise. Leverage that to provide them the ability to get credit underwritten from the bank. Now, from a bank or from another institution. And that creates a positive spiral for them to, today they're buying maybe every week stuff worth 5,000 rupees on credit. They can go up to 7.5, they can go up to 10,000, and that increases the entire risk. Similarly, are there ways and means by which a lot of these supply chains, and we are very interested in enabling SMEs, right? A lot of these MSMEs, how do they start accepting digital payments, and more importantly, plug into global supply chains? So is there a way by which the entire supply chain for them can become seamless? They can not just transact within the country through using digital payment methodologies or digital processes, but even internationally. So I think if you pivot it around these three areas and you build solutions around these areas, which are locally relevant, which means the language, which are functionally relevant to them, which means depending upon the type of service that you're providing, and they are close to you, then you're actually going to be able to leverage that technology penetration much better.
And I think in continuation to that, so basically, as Mr. Ashutosh mentioned about the applicability of these technology solutions. So I think now that we all agree on our forum that yes, technology has definitely enabled the financial inclusion from that note. I think now comes the second phase where we leverage that technology to reach even further. So now is the time that we have already framed a basic level of a structure that how we will gonna be reaching the last customers in the bottom of the pyramid by using technology. But now it's time to basically offer several other services with respect to just credit. And I would say that we as a group has evaluated ourselves, and we have diversified into the fields of cloud POS. We have diversified into the fields of big data analytics, where we today are helping small Kirana store owners to help to plan their groceries and how to manage their supply chain today, all through a digital route. So I think now would be a phase where we can use technology to overcome other aspects of challenges which used to come with respect to literacy or with respect to awareness, the IT and the operational risk, and also I would say a lot of regulatory changes which are being happening. So now that it is all streamlined, we have now are sitting at a sandbox level position with respect to fintechs, adoption of technology. So this again is bringing you a huge amount of opportunities in this particular space. And I think this, if planned in a correct way, can definitely help to address another problem, which is basically of over leveraging and over credit and the smaller stratas as well. So I think if we can work around into a partnership mode now, where technology and your business logics can come together, so I believe that credit is definitely going to penetrate deeper. But apart from that, other services can also go deep down into that.
Thank you, Shashank. Before I go to Mr. Doshi and I think all three of you make very important points. Amit was telling me earlier that the same question, he was telling me how e-rickshaw drivers who very often cannot read or write have to deal with people who actually swap batteries because that e-rickshaw requires freshly charged batteries. And the folks who are swapping the batteries are better organized, and they have now information about the e-rickshaw driver, and they become the focal point for the delivery of credit to the e-rickshaw driver. So similarly, now technology seems to be, one of the propositions that I have is that technology is creating focal points where even people who are not able to read and write can be accessed, and information that they will not be in a position to provide is being provided through alternate means. I mean, to your point, Shashank, and to what both to Mr. Tiwari as well as what Ashutosh was saying, there is an evolutionary process by which technology is bringing everybody into the net. I don't know if you folks agree with me or not, but that is my take with what you're saying. So let me turn this over now to Balaji, who is a consultant plus a banker, and he's worked with an institution that dealt with the underserved. So Balaji, what is your view, and how can we address the issues associated with illiteracy, the myriad of languages, multiple languages, etc., etc.? We can't hear
I
you.
think, yeah, you can hear me. So there are, I mean, different approaches. I will give you an example of what one of the small finance bank did, which is Ujjivan. We kind of started with a digital, the bank, which is basically the crux of the issue always has been how do you get the end customers, which is predominantly underbanked, similar to what Muthoot is facing. They have a smartphone in the family, but don't know how to use. And creating a digital footprint is important for them to get a loan, right? And that's the conundrum. To get them onboarded, they were creation of someone called a champion in the branch, which is purely people who are aligned and assigned to educate them on downloading the app, using the app, setting a utility bill payment as an example, and getting them comfortable, right? So that is one kind of a thought process. The second thought process was not to have pins, right? How do you make it frictionless? So two themes is what was done. Make it frictionless by usage of biometrics, and make them use one particular transaction and get them comfortable with how to use the smartphone, right? So that is one part of educating them, hand-holding them to get them onboarded, similar to what Shashank said, right? The second thing which we're facing now is that the people who first need to be even taught financial literacy, and how do you get them to think loans? How do you get them to think savings? The technology is out there in the form of a nice smartphone app, but it needs to be simple. It needs to be design friendly. So many organizations, including Axion, actually think about a human-centered design, wherein think of how do you design a solution and how do you ensure that their behaviors in a manner wherein they can actually start using it. So common buzzwords like gamification actually comes to life, where you're actually having a goal in terms of an education as a goal, and if you start saving small, right? So it's a thought process which is about getting them financially literate, then digitally literate, and therefore create a digital footprint which will enable them get proper lending, because in microfinance there are no alternate data at all, right? There is no cash flows, there's no alternate data, there's only cash, and the only way it works is trust, and group lending is the trust factor. So we're trying to see how it can move from group lending to individual lending by getting them predominantly digitally literate and create a footprint of their own.
Wonderful. So let me now, thanks Balaji, very, very interesting to note what one can do with a little bit of effort. But it does require physical infrastructure as opposed to just purely digital infrastructure, what you were talking about. Let me move to Mr. Doshi, who has built physical infrastructure, but that physical infrastructure would not work without the digital infrastructure that exists today. So, Ketan, if you could just talk to us about how you are ensuring that the last mile is covered.
What we see is technology is a bridge between the service provider and the physical local infrastructure. So if you want to go local, you need to have a presence locally. How the customer move is, as Balaji said, he will come walk in for a recharge or a bill payment. Then he'll move on to some booking services. Then he moves on to an ATM service, or he may open a bank account because the retailer relationship has built and he is pushing one product to the customer, and customer also gets a confidence because his bill payment was done, his recharge was done. Now he has a better confidence with the touch point. Then he moves on to a bank account, and he will move on to insurance. Then he moves on to a lending piece. So this is how the trajectory is happening. And I mean, last lap could be investment. So it can be a gold micro investment at a retail touch point. So basically, technology will play a bridge between the local. We have to go local. We have to be local to understand the local community, how it looks at a situation. The local language is required. Local training programs are required. Local awareness programs. So unless and until you have a physical touch point with a bridge of technology in between, bridge includes the connectivity, the customer acquisition tool, the data tool. Data is a tool. It is not a product, final product. And connecting this, I mean, the bridge is connected to a service. So service provider can be a bank, large bank, wanting to offer a micro loan of 10,000 rupees. Now, for bank, it will be just humanly impossible to reach out to a 10,000 rupees customer because the cost of acquisition will be crazy. So here is a touch point which is local, which can run the program locally and in an efficient manner. So there will be lots of collaboration between large NBFCs, banks, and on the lending side, as well as on the investment side and insurance side. There will be lots of collaboration going ahead, and people are ready to accept new products. But we have seen services are not available at the local level. I will cite a small example. I mean, we're talking digital. Let me give you an example which we are running right now. People are on a daily basis, on an average, walking at least 2.5, 3 kilometers just to do a withdrawal, just an ATM withdrawal. So every month we are processing close to 3 million transactions of this category. So what we are saying, the person is taking half day off just to take a money withdrawal. I mean, just to withdraw money from his bank account. This is the reality down the line. So we need to bridge this gap. How it can be done? Through a low-cost delivery model, which we have already put in place. And right now, if you see the digital big players in the country, let us list it down: Amazon, Flipkart, Paytm, to name few. So Amazon also has partnered with us or some players like us who wants to do a local, lead generation. So we are front-ending Amazon at our store. The customer can walk into my store, do a mobile booking, and the transaction gets closed there. Cash on delivery can happen at the store. Even the delivery can happen at the store. These are large format digital players. Now, to get the local market, they are coming offline. So I see technology as a bridge between the service provider and the last mile delivery, which has to be local or hybrid.
Thank you, Ketan.
It will take some time for us, for the customers to go online and do it themselves. It will take some time, and we have to undergo this.
Thank you, Ketan. That was very interesting. Now, let me. I'm conscious of the fact that we have perhaps 10 or 15 minutes left. So let me frame the next question, which I think is important. It's in two parts. The first part is there anything else that we need? We've built this wonderful digital infrastructure already. Given India's specific challenges, is there anything else that we need from an infrastructure perspective? Or is the view that, largely infrastructural challenges have been addressed and therefore now it is an execution challenge? And secondly, can we talk about a few success stories? How is it that we've actually used the new digital infrastructure and made credit or banking services available to the underserved? With that, let me turn it over to this august panel.
Yeah, so Mr. Sheshadri, answering to both the parts which you shared. So one is when we really have to reach at the bottom of the pyramid. If you look today, with the help of JAM, actually we are able to reach large sections of the society. Now, like government is doing DBT. Now, doing philanthropy is easy. When you are doing credit, you have to look into collections also. Now, that's why the question comes, can you really have more and more people who can generate data? So it's more to talk about socially relevant investments to happen. Now, when we talk about social space, it's predominantly as of now dominated by maybe NGOs and governments. But then there are many players who are for profit. For instance, we are working with some people, we know some people who are backed by good equity investment, who actually collect the waste from waste and rag pickers. And that they are really able to sell it off profitably. Or even they're from small stitching units, women and all, they're able to collect garments and they're able to sell it profitably. So there is a for-profit space in between, and to help that out, we have a huge space of now social stock exchange, which is supposed to come up. In fact, if you have seen, SEBI has put up the paper now, asking people to give their comments on that, and very soon we'll have these socially relevant entities listed, and they will be able to really have that money to reach to the underserved. Now, these are the people who will be able to generate multiple data points based on which you can do a very fruitful activity. Apart from that, if you see, this entire concept of double A, that account aggregators. Now, account aggregators are able to take data from IRDA, they are able to take data from PF, they are able to take data from banks. So multiple sources they are able to. Soon probably they'll be able to pull data from even mobile operators. So how much a person recharged does, what is his usage pattern. So a lot of the data which will flow into account aggregators that democratize the data availability. So whoever is nimble, whoever is innovative, will be able to create these sachet credit products and will be able to reach the bigger masses, as we were discussing. Now, the advantage of technology, which you asked for in the second part of your question, during these very tough times of COVID, which we heard that even the kirana shops and all really needed help because they were the ones who were helping us out, the vegetable suppliers, the kirana people and all. So this entire stack of a loan disbursement, of onboarding customers contactless, of signing agreement again in a contactless way, and even taking repayments in a contactless way. It really helped people like us. We were tied up with many of these data generators, and we were really able to do and we are happy about it that we were able to help this particular segment of Kirana segment through our Kirana outreach, which wouldn't have been otherwise possible without the technology.
Brilliant.
I see reverse thing happening in the industry. We created a physical infrastructure and 48,000 kirana stores in our kitty and generating about 1 crore of transactions a month. We have all data. We have all the kirana stores. We have all the collection points, and we have all the disposal points as well as the local points. Now we are seeing digital players coming reverse, seeking offline assistance, and it's a reverse thing happening in the industry, which is, I mean, you want Paytm. Paytm is also one of our partner banks. Paytm coming to the offline stores. We have Amazon coming to the offline stores, and when we started, we were slightly, out of the market, but right now we are at it. So reverse migration is happening as we saw during the COVID thing.
That's wonderful. Good. I'm sure that both physical as well as digital have to coexist. I think I cut off Mr. Chadha, who started saying something.
No. So the only thing I wanted to sort of add here, I think there's a lot of infrastructure we all agree has been created. There's a lot of penetration which is happening, and thankfully, we nearly have now with a billion-plus population, we nearly have a significant penetration, if not 500 million or more smartphones there, which is growing every year. We have the rural areas actually now picking up in the use of internet and access to internet. So I think all the pieces are over there. What we definitely, Mr. Shadi, you made a very important point. What more is there that needs to be done? And I think so. There are two things that we need to. We, as an industry, we need to be able to articulate well. One is that, and I think Amit talked about it. There is as much philanthropy that can happen. At the end of the day, scaling and sustaining this as a business is going to be very important. So we need to make sure that we don't artificially play with the economics of the businesses. That's one very important thing. And we need to make sure that, I mean, there are going to be so many payment facilitators around, there are going to be so many fintechs around. Let there be an equilibrium, as they say, which falls in terms of let market forces define how and what should be charged. But at the same time, we need to ensure that there are certain basic standards of service which are maintained. So while we should not artificially control what a fintech or a company earns or does not earn in this environment, we should also ensure there are certain basic standards, which is where, as I was talking earlier, I think there is the need to possibly create a quality of service as well as a redressal mechanism where the individuals know that if something goes wrong, there is somewhere where I can complain to, and within a period of time, I know there will be a redressal. So these are two things which I think are going to be very, very important to build trust, provide innovation, and provide the end customer the choice.
I think if I can add to it, I think what Mr. Ashutosh said is absolutely correct. As far as the microfinance customers are concerned, the acceptability of the product, the offering is very much, but they also have apprehension. So they have apprehension because there is lack of awareness. So I think one thing is there that we have to, as an industry, create more awareness and also build necessary safeguards. I think with lot of data available, with lot of financial transaction happening online, that also opens the door to all sorts of frauds and cyber attacks and everything. I think we need to build an infrastructure which is safe and secure, and the users should also accept it in a manner, and they should experience it that it is absolutely safe and secure to transact. So I think people on the panel refer to Amazon model. Amazon has also looked at assisted sales model. I think right now what we are into, the phase that we are into, is the assisted sales model, where we are helping adoption of technology by the rural folks, and we are training them and we are making them accustomed to use to this technology. I think what will serve us well is making sure that we make this as a safe and very healthy experience for these users, for them to continue to use it. And I think right now, as the panelists have said, this is the stage of investment, but at the cost of it, we should not forget the economics. I was reading some of the questions on the group. I think somebody referred to some interest rates, and some European interest rates were quoted. We need to understand the reality where we are in the saving cost itself is much higher than what European economies kind of have in rates. So there would be a cost to a service, but again, that should not be exploitative, but it should be sustainable. That is what we have to look at.
So, no, I think very, very interesting. Let me ask Shashank for his views. Whether he's an enabler to business. So he probably has a different take, perhaps.
So you're very right in this part that there are certain levels where we need to go further from this note. And I think as fintechs, what we've been doing very hard, and we've been striving hard on this point, is that the lower strata of the group today, they are very lower income groups, and the kind of inconsistencies in the income, the kind of cyclic cash flows on which they sit, it then basically brings out another problem, which is the dependency on the borrower for data disclosures. So I think as fintechs, what we've been working on is to reduce this dependency. uh, we as a group have been working on to generate a lot of alternate data parameters, which can then in turn reduce this dependency. That is number one. And number two is that use of lot of socio-demographic factors, which today can actually help you to bring that cost of credit down, and to customize your credit scorecards basis on the different kinds of customers. And talking about a few use cases here, so for example, let's say in this the pandemic COVID-19 times, so we've been working very closely with the BFSI group, and we've been harnessing a lot of GST data of the customers, where the different lenders, they need to evaluate the performances of these companies in the last financial year. So we've been working very closely in that space. And also, I think we've been working very closely with a lot of retail NBFCs and NBFCs who are into business loans, and we are helping them today to bring out more detailed scorecards. What additional data points can be added up to that part, apart from your mobile phone penetration and your socio-demographics? We are even trying to build analytics on the historical data, which is present with a lot of lenders today. So I think if we can harness this data very rightly, it can become the new currency for us, and definitely it can help us to bridge all these gaps, certainly, which we are addressing here today.
Thanks, Shashank. It's been a fascinating discussion. We've come to the point in time where we can take a question or two. One question that Mr. Chadha has pointed out to me is that within the group there seems to be some discussion as to, the felicity of transfer of money. Apparently, there are instances where money is being transferred to poor people, and some of them are not getting it. And the question is, how can we address this issue, and how can we build safeguards such that these kind of issues do not recur? So maybe I turn this over to Mr. Chadha himself, since he pointed out this question, and maybe he has a view on how it may be answered.
Yeah, actually, in fact, this is an interesting situation. We've seen over not just in India, actually, we've seen across the world that during the last 3-4 months, there has been an enormous amount of direct benefit transfer, whether it is to citizens or whether it is to small and medium merchants, right? In most cases, the small and medium merchants do get the money, but a lot of the citizens, and especially when we have been talking to people in governments, state governments, etc. here, especially in the case of migrant workers, right? Though many of them would have Jandan accounts, but many times those Jandan accounts are either at their place of work or they're at where they work from. And sometimes these people are caught in the limbo because they don't have access to that. As a result, the money can't reach them, right? And obviously, you're not going to be able to give cash. So are there alternate ways by which one can do that? And we've actually, along with the government, we've worked with a couple of partners, small Indian companies, fintechs, etc., to come up with solutions where you can quickly authorize these individuals, the migrant workers or the laborers or those people who are moving from place to place, recognize them, provide them with a certain amount, with any type of a form factor, whether it's a card or a virtual card or a token card or whatever it is, where you can actually load the money, and these people can then use that to go and transact at various places. That actually enables them, because you then take out the need for physical proximity to an ATM or a bank branch, or the access which they did not have, because they most probably they have left their Jandan account card at their village or wherever it is. That's one interesting thing. And the other interesting thing which we came across in these discussions was, many times, even when you look at providing loans, there is the need that when you're giving a loan, you want to make sure that the loan is given for the purpose it was given. It's not used irrationally, right? So technology today gives you the ability to actually control how that loan can be used. So can it be used to ensure that my supply chain, I buy stuff so that my supply chain remains alive? Can it be used so that I can provide for giving salaries to my workers and not be used for something which I'm not supposed to? So when the government is, for example, giving away loans or grants to small, medium businesses, you can actually ring fence the way that it's used. Technology actually now gives a totally different picture or lens to the way direct benefit transfer can actually be handled and monitored and controlled.
Thank you, Ashutosh. That's a very, yeah. Go ahead, Ketan.
I mean, we would love to work with MasterCard to develop something where disbursement can happen seamless. But at this moment, even Jandan accounts are accessible across India using biometrics, as well as ATM card can also be used across India to do a withdrawal. The only problem area is if the biometric doesn't match. Right now, there are no this Aadhaar center to remap the biometric. Only that piece of link is missing, but biometric can be used anywhere without the account. Only Aadhaar number is enough for a withdrawal.
Wonderful. No, I'm happy to note that there are checks and balances that ensure that issues that arise can be addressed. Alas, we are reaching a point in time where we've run out of time. It's been a fascinating conversation. I want to thank all the panelists for their very, very engaging comments and the insights that they've provided. It's been wonderful. I think the subject at hand was also very, very relevant. I want to thank the team at ASSOCHAM that made this possible, especially Dr. Singh and his team that put this together at very, very short notice. So my thanks once again to the panelists. Thank you for taking the time on a Saturday afternoon to be with us. And my thanks to all those who attended for making this a very, very fruitful session. Thank you very much, ladies and gentlemen. Thank you.
Thank you.
Thanks.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
Very much.
Thank you very much.
Are we signing off? Yeah.
I think we need to sign off. All right.
Yeah.
I'm going to sign off too. Thank
Right.
you. See you, Ketan. Bye-bye.